Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. International bondholders are likely to accept a 30% haircut. Sri Lanka to grow 1.7% in 2024, says World Bank. Policy rates cut. In our main story this week, Sri Lanka's international sovereign bondholders are likely to accept the 30% haircut proposed by the Sri Lankan government. This was reported by Bloomberg Economics this week. The move is deemed possible as ISB holders' demand to include rupee debt in restructuring has been met, and domestic debt restructuring has lowered the burden of restructuring for the dollar creditors. However, the country may need a larger haircut to reach debt sustainability by 2032 to meet the IMF requirement of public debt at 95% of GDP. Sri Lanka is in talks with the bilateral creditors, United States, Japan and India, to restructure its foreign debt by October. Such moves come as last month's review visit by IMF officials to the country highlighted the need for financing assurances from bilateral lenders for further relief aid. Meanwhile, the US, France and the UK supported Sri Lanka's request to postpone a lawsuit filed by Hamilton Reserve Bank. The St. Kitts-based bank is seeking full payment and accrued interest on bonds exceeding $250 million, which were due in July last year. The World Bank forecasts Sri Lanka will grow 1.7% in 2024, following a 3.8% contraction this year. It said the country has seen decreases in inflation, strengthening currency and improved foreign exchange reserves. However, monetary policy relaxation and potential exchange rate challenges were identified as risks to falling inflation. Further, the institution characterized Sri Lanka's tax system as enduring a low, multiple and frequently changing rates, a narrow and shrinking base, a high tax burden on labor and over-reliance on indirect taxes, as well as a weak administration with poor compliance outcomes. On Thursday, the central bank cut interest rates by 100 basis points. Another rate cut was anticipated due to disinflation since September last year. The board had arrived at this decision following an analysis of the current and expected developments, including low inflation and benign inflation expectations in the domestic economy, with the aim of stabilizing inflation at the envisaged 5% level in the medium term. In September 2023, inflation fell further to 1.3%, with food prices declining 5.2% from a year earlier. In our weekly tourism update, tourist arrivals in September reached 111,938, pushing the year-to-date number to over 1 million. This is the first time in 3 years that the 1 million mark has been achieved. The primary source market in the month was India, followed by China and the United Kingdom. There was an increase in Chinese visitors as a result of the Golden Week holidays. Sri Lanka's tourism authorities have set a year-end target of 1.55 million visitors. The Ceylon Electricity Board has requested the Public Utilities Commission of Sri Lanka to raise electricity rates. CEB notes that this is to pay for the cost of generating electricity from thermal power plants during the dry weather. Energy consultant Dr. Tilak Siambalapitiya warns that if the proposed hike is approved, Sri Lanka will have the highest electricity rates in South Asia. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. In other market news, LOLC Group's Singapore-based subsidiary Sustainable Capital PLC plans to generate $100 million via the issuance of sustainable bonds. The proceeds are to support livelihoods of the rural communities served across the group's global presence in Asia, Central Asia and Africa. The instrument is to be listed on the Frankfurt Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities contracted. Bids amounting to 205 billion rupees were received, of which 110 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with central bank's indicative mid-spot rate ranging around 323 rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for more updates on economic and business developments in Sri Lanka. Until we'll see you again next week, thank you for watching. Stay safe.